Last week was a wake-up call for home buyers across the Bay Area. Mortgage rates moved sharply higher, which resulted in higher payments and decreased buying power. Now, before we get into this couldn't be more perfect timing for where we're at in this market. I have a quick announcement. This coming up Thursday, 6:30. Put this on your calendar. I'm hosting a live webinar for Bay Area home buyers. This is not your typical home buying webinar. We are not just going to talk about loan programs and rates. I mean, that's just a yawner. We're going to teach you how to negotiate smarter, how to save money, how to avoid paying in today's housing market, how to compete strategically without emotional decisions, and most importantly, I'm going to share with you the one key trait I consistently see from families who save the most money short-term and long-term. I'm going to tell you exactly what that trait is during the webinar on Thursday. Come on, you saw that coming. So if buying a home is one of your goals, you don't want to miss this webinar. It's going to be amazing. I can't wait to see you there. Now back to the market. Last week, rates moved higher. Why did they move higher? Well, first of all, we have oil prices moving higher fast. Inflation fears increased again. Uncertainty around Iran made investors extremely nervous. When investors get nervous, mortgage rates can move quickly up. Here's where rates stand as they are today. Keep in mind the market's closed. VA's at 5.875, FHA 5.75, conventional 6.25, jumbos at 6.125. These are all shown with 1 point, assuming a 780 or higher FICO, conventional and jumbo, 25% down payment. Now, here's what really matters. The buyers winning today are getting one thing. They're getting the best strategy. Trying to perfectly time rates rarely works for buyers today. They're up and they're down. I mean, trying to time it is like trying to time the stock market. It's just nobody gets that right. But prepared buyers move quickly when the opportunity appears. Like, for example, last week, Freddie Mac showed rates jumping from 6.365 to 6.51. Mortgage News Daily saw rates go all the way up to 6.75 before they started improving. This is a huge move in a very short time. For example, if you have a $700,000 loan, that could change your payment $200 to $300 per month for buyers. This is real money for real families like you. Now, let's talk about this week's markets, which we'll be watching for several major reports. We have consumer confidence numbers coming out, GDP. We have jobless claims data, new home sales activities. And here's one that we're going to be watching closely, PCE, which is inflation data. PCE is one of the Fed's favorite measurement of inflation reports. You know, if inflation comes in hotter, you can see rates be, pushed up even higher. If inflation starts cooling down, rates could finally improve somewhat. But here's what smart buyers are doing. Smart buyers are aware of what's going on with the rates, but they're also not trying to time it, right? They're using seller credits. They're using temporary rate buy downs. They're targeting homes that are sitting longer and negotiating on price. They're getting fully underwritten before shopping for homes. Some buyers are even purchasing homes now with future refinance plans, because here's the deal. Right? Depending on when you buy will determine where the rates are at will determine what your overall strategy is. Speaking of strategy, right? If rates are higher, you're probably going to be setting yourself up for a refinance once rates come back down. Because remember, it's all cyclical, right? But if you get lucky enough to get into contract when rates are down, then it's more of a long-term, let's maybe pay a point to get the lowest rate possible, because you're going to sit in that loan for 5, 10, 15 years. So depending on where the rates are at, that is going to be the key to your strategy. And you have to be aware of that if you want to save money. Now, inventory has been picking up nationally. Keep in mind, real estate is not nationally, it's really locally. Every local area is going to be different. A strong real estate agent is going to be key for you having long-term appreciation, or to have the most appreciation. If you're not working with a great real estate agent, reach out. I'd be happy to connect you with one of my agents. I only work with the best. They're going to help you navigate this system, whether the system, right? Whether it's going to be when you buy with the higher rates or the lower rates, they're going to get you the best price, know how to negotiate, and all that wonderful stuff. So Just remember, if you're out there looking for homes this week, reach out. Would love to connect with you. Do what's called a strategy session. A strategy session, we're not going to pull your credit. We're not going to, no commitments, no applications. It's just me and you utilizing my 20 years of experience on helping families save money. Let's put a plan in place for you, and let's make you more certain about this market, because it is a great market to buy. If you're sitting on the sidelines because you're nervous about rates, guess what? A lot of other people are too. And this is where you can win. However, if the rates make you feel more comfortable to come back in, that's probably going to be the same for other families too, which is going to increase competition. A lot of great things that we can do. Sign up. Let's do a strategy session. At least come to my webinar on Wednesday. Hope to see you there. So that's a wrap for me. My name's Paul O'Brantz, Clear to Close Brokers. That is our Monday update. I will see you. Let me see if I can time this perfectly. Next week. Did I get that right? No, next week. There we go. I think I did it.